right now we're incredibly boring because we're not talking, but we will fix that right now and tell you about how to get a house. We are talking today about get a house. I got a couple of questions today from TikTok that I thought was kind of fascinating. And some of them had to do with a one-time construct. The big question that kept coming up was, can you finance the land, the contractor, and the build of the house into the one-time construct loan? What do you say?
Yeah,
The
you
land, the contractor,
Yep.
and the build.
Mhm.
How does that work?
Well, first off, everyone, load up that chat box. We want to answer all your questions about your scenarios. Make sure you have everything here that you want to know about buying a house. So how does it work? So when you're doing a one-time construction, the first thing you have to do is identify the property, okay? So what land do you want to buy? What piece of land do you want to buy? Once you identify the property, let's pretend you're already qualified to do this, by the
Okay.
way. Once you identify the property, you need to get in touch with a licensed contractor depending on the state that you're in. Some good news. Depending on the state you're in, you don't need to have a licensed contractor.
What?
You don't have to have anyone with any kind of credible license.
No way.
As long as it meets all the criteria for the state or township or the city
Sounds
that you're in.
sketchy, dude.
It does.
It just
but,
sounds sketchy.
But have you ever had an inspector come out
Yeah.
and verify that the work is done properly?
Yep.
That's your saving grace. Okay?
Yep.
So as long as the work is done right and it meets all the standards of the city or township that you live in, you should be fine. Okay? So the contractor is going to come out and start building the property. But here's what happens, guys. Here's what you need to know. When you're going through the one-time construction, you have draw periods. So let's say you have a $400,000 with the land, the contractor, and the build of the property. Total cost $400,000.
400 grand.
So that contractor is going to need money out the gate. One, because they want to get paid. Two, they need money to start the project. So let's say you pull out $100,000 just to buy the land.
100 grand?
Just to buy the land.
Okay.
You're going to have an interest-only payment on that $100,000.
Okay.
Out the gate.
So
okay?
what's the interest? What does that look like? I mean, like real world, I actually did this. How much am I going to pay if I did the one-time construct loan and I take that first draw? What's my monthly payment?
So when you take the first draw, depending on the amount, we're using $100,000 here. The last I checked, which was a few weeks ago, it's 8%. Okay. So you got, let's just call it an $800 monthly payment on that $100,000.
Okay.
Interest only. Interest only, guys. You're not heating into any principal.
Okay.
Interest only.
All right.
Okay. So you get that $100,000, you buy the land. Now you need another $100,000 to do the foundation. So there's $1,600. Now I need another
You need
$100,000.
100 grand for the foundation?
I don't know the numbers, guys.
That's a
I
lot,
don't know
right?
the exact. I don't know if you have a 1,400 square foot house.
I actually heard that the
3,000
foundation
square
is
foot
probably
house.
the most expensive part of the whole process.
I'm just giving you an idea of how it works.
Okay.
Okay. So for every $100,000 that you access, let's just say it's an $800 monthly payment. Okay. $800. So eight.
Hard us up.
24,
Hard us up. We're
32.
trying to help you get a house.
$3,200 in monthly payments just to get this thing built. Now that's if you did it in a timely manner. Maybe 6 months. You're only going to be doing this for 6 months. What if it takes you 1 year? What if you get a special extension and it takes you 18 months? You need to be able to afford your current life and this additional $3,200 a month payment.
So you pulled
while you're
800.
building it.
You pulled 100 grand out the first time for the land, just for the land, and then after you pulled that 100 grand, you now owe 800 a month. Then you pulled out another 100 grand for the foundation. So now you owe 1,600 a month, but you're not living in a house right now, right? Right? You're still
I don't know where you're
renting.
living.
You're living with your
Are you-
mom or
yeah,
whatever.
I don't know where you're living.
So then the third one, obviously, you land up at $2,400 a month. $2,400 a month, and then finally you get to that fourth one at $3,200 a month, and by then theoretically you take that loan out, right? Mm-hmm. And then you put it into a Fannie Mae, Freddie Mac. Freddie Mac. Cool.
USDA, whatever it may be. So that's your one-time construction rough overview. If you guys are interested, let us know. Just be honest. It's not easy, guys. It's not like, oh, just build my house, everything's fine, I got traditional financing. No, you got to carry both lives, and there's a lot that goes into building a house, and nothing gets finished on time. Unless you got a badass contractor like TRUMP.
Damn. Okay,
might be
cool.
able to beat
TikTok
this
user, the process of bankruptcy. Just curious on realistic time frame of when I can purchase a house. Probably going to be a long time. It's probably going to be a long, long time, especially if it's a Chapter 7. Chapter 7, the best case scenario you can get. 2 years from date of discharge. Not from date of filing, from date of discharge. By the way, right behind that, it says Rife's credit is 750. Doesn't matter what your credit is anymore. That's called a hard stop. Hard stop means that your credit went really good because you just walked away from everybody. That's why. Everybody, and by the way, you get more credit card offers when that happens, but the banking industry knows, hey, this is a Chapter 7. Chapter 7 says, I'm in way over my head, screw it, system, just take over, I'm done, I can't do this. The system goes, all right, we have a system to solve you, but we're not going to give you the opportunity to get a house for a very long time. 2 years is best case scenario, 4 years in some cases, 7 years in other cases. What? Yeah, real.
All right, Rabbit 66. So you sell houses in New Mexico?
No, I don't sell houses anywhere. I don't sell houses anywhere. I'm not a real estate agent. I'm a loan officer. Do I do loans in New Mexico? Yes, all 50 states. All 50 states. Fun fact, I hail from Santa Fe, New Mexico. Santa Fe, New Mexico. Hail, that means I come from. I hail from Santa Fe, New Mexico. Got a lot of property in Rio Rancho, New Mexico. So I get there often. Parents, family, still there. So, yes, we do loans in New Mexico. Yes, we'd like to help you.
Steve, asking questions about VA loans. Hey, man, does that mean you're a vet? Thank you for your service.
Appreciate your service.
He wants to know, how can you qualify for a VA loan?
It's pretty simple. Here's what you do. First, be a veteran. Now that you've done that, you're qualified. You're qualified. Now we have to figure out how much you qualify for and some other stuff, because there is no FICO requirement on a VA loan. No FICO requirement. That's by the VA guidelines. And that's if you're VA direct. Now, if you go to a bank and they say, hey, we can only do it if you have a 640, that means they have an overlay. In their bank, they have a qualification number for a VA loan. However, VA, straight guideline, no requirement for FICO. That doesn't mean your credit score doesn't matter. It does. It goes into pricing. It goes into a lot of different things. However, it's not a hard VA guideline. So very simple. How do you qualify? Be a veteran. Call us. We'll take care of the rest.
All right, everybody, load up that chat box. All the questions, comments, concerns about buying a house, make sure you put them here. We're going to answer them live and call you out so you're on the right path to home ownership.
TikTok user, Chapter 7 versus Chapter 11. Chapter 11.
What is better for purchasing a house?
What is better for purchasing a house?
There's not better in those scenarios.
Yeah, a little bit. What is it? It's 13, isn't it? Chapter 13. 11 is a corporate, isn't it?
You're talking about Chapter 11, man.
All right. Chapter 11, I think, is corporate. Chapter 13 is a personal loan, but Chapter 13 is called a reorganization. What happens with Chapter 13 is this. You go, hey, Your Honor, I got myself in way over my head. But you know what? I don't feel like it's right for me to walk away from all my debts. I just don't feel like it's right. Your Honor, I just like to reorganize this so that I can afford to pay it. And Your Honor says, all right, it's a very noble way for you to do things. Okay, cool. I see you're paying $4,000 a month, and you're right. With your income, that's too much. So I'm going to reorganize this so that you pay $3,000 a month. And you say, thank you, Your Honor, and that's it. While you're in Chapter 13, I can actually do your loan while you're in the middle of it. After you've made a certain amount of payments, then we go to Your Honor and we say, hey, Your Honor, this guy would like to buy a house. And he'll look at, has he made his payments on time? Yes, cool. What's his income? Yes. I approve, Your Honor says, I approve for you to buy a house while you're in Chapter 13. Can't happen. Can't happen. And it can happen anytime after that. Anytime. Has to be approved by the court. Chapter 7, hard guideline. It's like, hey, you walked away. You just said, poof, I'm done. Not going to touch this stuff anymore. I walk away. Bye. Well, in that case, hard guideline. 2-year, 4-year, 7-year, depending on the loan.
Navy Mom Donna, how you doing?
What's up, Navy Mom Donna? Great to see you.
Ashil said, as an LO, I always get asked if I'm a realtor. That's a great sales tool, though.
Yeah.
So someone says, hey, can you help me buy a house? Yeah, I can. Can you help me shop in different areas? Mm-hmm. Yeah, I can. I can actually introduce you to one of the best realtors in your area.
And if you're an LO, hey, listen, if you get 5 good realtors, it'll change your world. 5 good producing realtors. 5 good. You're going to get 1,000 that want you to buy them Zillow leads and pay for their this and pay for their marketing and do this and pay for all kinds of stuff. You'll get 1,000 of those. And they're like, hey, you don't understand how good of a realtor I am. You got to believe in me. I believe in me. You see those guys come in every single day. We've been doing this for a very long time. Whenever someone sits in front of me, I actually understand that there is a 90% chance they will not be in the business 3 years from now. 90% chance. However, you get that realtor that's still in the business, it'll change your life.
Roosting Pines Ranch, 18K down, 700 credit score, $120,000 a year. What can I afford?
Anything you want, basically.
That's a
anything
great credit,
you want.
great income.
Yeah, I'd say depending on the rates, because they were down a little bit. Like if you'd have asked me that 2 weeks ago, I'd probably told you 6, 7, maybe even up to 8. Today, I'd probably tell you 5, 6, somewhere in that range. But the rates can bounce in a blink. And this is after the Fed cut the rates. I have a funny feeling after the election, we're going to see a dramatic dip in rates. Not because the Fed's going to reduce the rates. I think they're going to reduce 25 basis points, but that's not a lot. After the Fed creates the baseline, then there's this gigantic pad of between 100 and 250 basis points called the yield spread. And right now we're at the top because there's uncertainty in the market and rates are pretty high right now, but they can go down fast and you could be in the 600-700 range again fast.
Yeah, Roosting Pines. How soon are you looking to buy? What area, what state? Let us know where you're at. Cherry Blossoms. I'm in Tennessee. How much down payment to buy a $1 million home? Self-employed, 1099.
$1 million. How do you do that? $1 million home.
Dr. Evil.
Dr. Evil. How much you want for $1 million home? If you're a veteran, 0. You can do $1 million home. 0.
What?
Yeah, true. Cool. If you're at FHA and the county loan limit allows it, 3.5%. County loan limit has to allow it. That's different in every county across the country. There's this giant list. You can Google it or you can call us and we'll tell you what it is. But like if you're in Los Angeles County and you want to buy a FHA $1 million home, how much?
3.5% down.
3.5% down. 3.5% down.
Yeah.
If I want to buy conventional and it doesn't break into high balance or jumbo, 5%. 5%. If it does break into high balance or jumbo, 10%. Pretty simple, right?
Pretty simple. Cherry Blossom, reach out to us. We'll tell you specifically for where you live.
Specifically.
Because every county's different.
Or like we say in California, pacifically.
Yeah, boy. Yeah, boy. Thoughts on Zillow loans?
Thoughts on Zillow loans? Yeah, boy. Yeah, Zillow loans are...
Or yeah, boy. I'm your boy.
I'm your boy. Okay, so all loans that are conventional conforming loans, that's FHA, Fannie Mae, Freddie Mac, USDA, VA, a few others, but those are the primaries. They have a set of guidelines. So all the banks are kind of the same. The difference is, can the bank do specific things? Now, your lower level banks are going to have overlays. Not bad, they're just growing their way up into be a big bank. The big bank is going to have no overlays. You're going to be direct, which means the underwriters underwrite as if they're directly writing for Fannie Mae, Freddie Mac, VA, FHA, and each one of them is its own vertical. They don't automatically get a blanket approval for any of them. Zillow loans, because they're brand new, they haven't worked out all the bugs yet. They do have a lender behind them. The lender behind them has to follow the FHA guidelines. It's Fannie Mae, Freddie Mac, FHA, VA, USDA, same thing, same thing. The difference is they don't have the experience on how to get through it. So I'll give you another example because Zillow's kind of new at this. I'll give you Rocket. Is Rocket a good loan, a good place to get a loan? I would say yeah, for some people, a very tiny part of the population. Rocket's amazing. How is Rocket amazing? If you're an engineer and you make $200,000 a year and it's been W-2 for the last 2 years, no bonuses, no overtime, you haven't been divorced, you're not married, you're putting either 3.5% down or 5% down and you have an 800 FICO, Rocket's probably your best bet. Why? Because they don't pay the loan officer. They don't. They pay him little tiny, like $300 or something like that. I'm not even sure exactly. I gotta be careful of that. But they don't pay him very much. Why? Because they don't need to. There's no skill involved in that. It's a very easy, simple loan that can be done by a computer, as long as you fit that perfect category. Now, if you have one 30-day late, or if you have two 30-day lates, is Rocket the best for you? Probably not. If you've been divorced and you have alimony, or if you've got a 640 FICO, is Rocket the best? I'd say heck no. You need a skilled licensed loan officer inside of this that cares about your file, that is actually getting paid for your file. Because strange thing, talent requires payment. That's the reality. If you're getting rid of the talent payment, you better be perfect. So I'm a fan of Rocket under a certain scenario. Perfect scenario, I'm a fan. But if you've got any hiccups at all, you were 1099, you got a bonus on your job, anything, then I would say go with a real life loan officer that you can get a hold of, that can explain it to you. And if they ask you questions, they answer them on the spot. They don't have to go, well, let me check the guidelines and I'll get back to you. Oh, that's a good question. Let me get back to you. Those guys don't know shit. I mean, sorry, they don't know anything. They know very little, should I say. Yeah. So anyway, yes. Am I a fan of Rocket? In a perfect scenario, yes. Am I a fan of Zillow? In a perfect scenario, yeah. The advantage they have is they own a large part of the market, and because of that, they have access to houses that everybody else doesn't have access to. It's like builder loans. There's a builder in my neighborhood who just put up a whole bunch of $800,000 houses. The only way you can buy that house is if you use their loan officer. That's kind of illegal, but they're doing it in a weird way. But am I a fan? If you like that house, use that loan officer. That's all you can do. It's called a captive loan officer, captive bank, captive realtor. But am I a fan of Zillow? No. Am I a fan of Rocket? No. In a certain scenario, yes, absolutely. Yeah.
Roosting Pines Ranch. Looking to purchase the beginning of next year, March. I'm located in Georgia. All right, Roosting Pines Ranch. Here's what you're going to do. Get pre-qualified now. Get pre-qualified now. Why? Because there might be a hiccup somewhere in there that you don't even see or even know about, or maybe it's something so long ago that you figured it was just gone, okay? Mm-hmm. If you've ever taken a trip to the emergency room, just ever taken a trip to the emergency room, they charge you for every single thing that goes on in that emergency room. Mm-hmm. The wheelchair, the chair you sat in for 9 hours just mm-hmm. to be seen, the medicine, the Advil, the Tylenol, every little piece. And here's what happens. Dozens of these bills go out because they're all different entities inside of the bank. And what will happen is your insurance company may not capture all of them, and some of those will go to collections, and those things pop up and they can affect your credit. So I hope you've never been to the ER, but I'm just giving you an example of things that pop up that people don't see. So Roosting Pines, get pre-qualified now. If you're interested, go to the link in the bio, select apply for a home loan now, or call us because our phone number is there too.
Yep, right here.
Rico! I don't have a primary home. I have a mortgage on my investment property. Can I still qualify?
If you don't have a primary home, and why are you screaming at me, Rico? Why are you screaming at me? I'm not screaming at you. I'm talking with passion. I'm not screaming. If I don't have a primary home, I have an investment mortgages on my investment property, can I still qualify? If you're buying a primary residence, you are in a very good situation. Very good. Why? Because you have to say, hey, this is my primary residence. I don't have an FHA loan out there. You can go FHA 3.5% down. 3.5% down. Can you do it? Yes, you can. You can go conventional, 3% down sometimes, or 5% down most of the time. So can you qualify if you don't have a primary residence? All day, every day, that's a really good scenario.
George wants to know how long until he can refinance an FHA loan.
Well, George, the biggest question is it a good idea? How long is usually 210 days, and that's a VA guideline, not an FHA guideline. But it's usually 6 to 7 months after you get your FHA loan. There's a lot of catches on an FHA loan. There's a lot of catches. One of them is you have a prorated UFMIP. What's UFMIP, you ask? Good question. I'm glad you asked that. It is 1.75% of the loan that's tacked on to all FHA loans. So if you bought a $500,000 house, FHA says, hey, congratulations on buying the house. Give me 1.75%. You're like, why? Because I said so. That's it. There's no other reason. 1.75% tacked on every single loan. On a $500,000 home loan, that's $8,000. Just gets tacked on the top. Nobody even talks about it, but it's there, UFMIP. Now, if you refinance within a certain period of time, you have a prorated UFMIP that goes into the refinance. If you're doing something called a streamline, your rate has to be better, your payment has to be better, and you have to recuperate the cost of that refinance within a certain period of time. It's called a net tangible value test, and your loan has to pass it. So it's not a matter of how long, it's a matter of does it make sense, will it work, if you're going for an FHA streamline. If you're going for an FHA cash out, you have to have 80% loan to value. 80% loan to value. Most people don't on an FHA.
Yeah, Cherry Blossom, you're very welcome. Hope to hear from you. And you just heard what he thinks about Rocket Mortgage.
Yeah, what do you think about Rocket? Yeah.
Okay, Ali, tengo un casa pagando valor 700,000 pudiendo openar un prestado basado en el valor de mi casa para comprar. Go.
I saw this TikTok video where the guy says he drove up to the window of a drive-thru, and he goes, okay, do you speak Spanish? And the guy says, hold on. The guy shows up and he goes, I speak Spanish. He goes, okay, I'll take a number 6. And I laughed my ass off. I thought that was funny. That's funny as hell, yeah.
Okay, we don't speak Spanish like that.
Yeah.
But I would be more than happy to answer
says you have a
if
house
you transfer it in.
for $700,000. Can I open another house?
Ask us in English, or if someone can help translate, that'd be awesome. I would love that. Jackass, buying an Airbnb property in Clearwater. What's your thoughts?
My thoughts are, if it pencils out and you can make a profit, I'm all for it. If it's not going to make you profit, probably a bad move.
All right.
Yeah.
Airbnb, the business model and everything's still getting ironed out. A lot of people made a bunch of money at the beginning. A lot of people are losing money right now.
I have an Airbnb, and if I'm honest, it doesn't make money. I lose money on it, but I'm gaining, and I can write off certain things. I got appreciation on property, depreciation on property. I'm sorry, appreciation. Yeah. There's reasons why you do an Airbnb, but if you're doing it straight for profit, I have not seen one that net works.
And Jackass, kudos for being a big boy and being an investor and getting out there and trying to make it happen.
Yep, cool.
Roosting Pines, you bet. You're welcome. Arthur. Oh, whoa, it bounced on me. Arthur, what do you think about Trump's house tax cut policy? Oh, I can't say that word. It's supposed to say
don't
money.
say that. T-money. Yeah, T-money. What do you think about? I don't know which one you're talking about. There's a whole bunch of them. So, yeah, there's a whole bunch of them that are being proposed. I do know that this Phantom, I don't think it'll ever pass, but I don't ever know what the hell's going to be real anymore. Man, I didn't think that you could, I'm going to be quiet with all that stuff. What do I think about them? Most of them are good from an economic policy situation. Most of them are good. Very few do I disagree with because I understand the macro. Now, there's somebody who is proposing, hey, I'm going to give poor people $25,000 to buy a house. And I'm like, ugh. Somebody came up to me and they go, Lee, what's wrong with that? I said, okay, cool. So let's say that you have a 13-year-old kid. You have a 13-year-old kid and he says, hey, listen, while you're gone, I'm going to run the house. I'm going to eat Snickers bars and Three Musketeers bars and Rocky Road every day for breakfast, lunch, and dinner. Okay? Sounds great. It does. It sounds great. And the first meal, you're like, I love eating Rocky Road for breakfast. It's amazing. I'm about Snickers for lunch. That's awesome. You don't understand the damage that you're doing. You don't. You won't until you get grown up and you understand, oh, shit, that was a very bad move. That was a very bad move. Now, to understand money, economics, you have to step back and go, all right, if I give somebody $25,000, is that a good move? It sounds like it is. But if you really understand it, it gets absorbed into the market and you just made some very rich people even richer and you think you did good for them. What? Yeah. So, yeah.
All right. So, Rico said, sorry, can't say. I think you're talking about the phone number. And guess what? It's time for a commercial anyway, so screenshot.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But don't dial right now because we are on Instagram, Facebook, TikTok, and YouTube live, and we will not answer. I'm telling you, shocker, we will not answer. This will disappear in 5, 4, 3, 2, 1, bye.
All right. Let's see who's next. Philip Patrick.
What's up, Philip Patrick?
I own 2 properties free and clear. What loan is best to pull money out to purchase an investment property?
You don't have a whole lot of choices. You don't have a whole lot of choices here. So, well, wait a minute. Let me say that correctly. If you live in one, then you have the choice of, if you live in it, FHA, you have a choice. And if you live in it, you can do a cash out conventional. But there's a lot of moving parts on this. Here's why. Because you need reserves. Reserves are, can I make PITI, principal, interest, taxes, and insurance, on all loans for 6 months, 12 months, or 24 months, depending on the guidelines. And if you have multiple investment properties, bad news, 24 months. That's what it is. If you have one investment property, sometimes 6 months, most of the time 12 months. But multiple investment properties, 24 months investment property. So what can you use if you live in it? FHA, Fannie Mae, Freddie Mac, or you can even use DSCR. DSCR is going to be a whole different ball of wax because it's an alt QM loan and the math has to math and it has to pencil out just perfectly. But yes, all of them.
And we have a HELOC, a home equity line of credit, one specific program that will allow you to access funds in an investment property. So there are options for you, my man. Monica. Oh, Clearwater is underwater. Literally, said Marketing Life.
Is it clear? Is it clear?
Literally.
Clear,
Underwater.
literally.
No, that's the Atlantic, man. That is not
Well,
clear.
you know what happened? Yeah, you know what happened? There was, we have offices in all parts of Florida, and we got notices. We are no longer funding loans in these counties. No longer funding. As of right now, all loans are stopped. All of them are stopped. Why? Because the bank doesn't want to fund.
Not right now. That was during the storm.
During the storm, sorry. Yeah, during the storm. During the storm, they said, hey, these are stopped. And we're like, whoa, that's pretty harsh. Happened too when the fires were taking place in California. In California, if you live in San Bernardino County, there's certain areas where they said, hey, no longer funding in this area, this area. Why? Because we don't know if there'll be a house there tomorrow. That's real life. That happened.
Scary, guys.
Yeah.
I'm glad a lot of you are okay now.
Yep.
Rico, thank you for the love. Philip Patrick already said that
Yep.
one. Monica, do you guys think the housing market will be better to buy in 2025?
Monica, that's relative. Here's why. Do I think the interest rates will go down in 2025? Yes. Doesn't matter who gets into office. I think interest rates are going to go down. Why? Because they have to. They have to. But the other side of that is purchase prices are going to go up. And I believe they're going to go up dramatically. Like not a little bit, like a lot. So is it better if you have a higher interest rate and a lower interest rate and a higher purchase price? I don't know. Is that better for you? Is it better if you have a higher interest rate and lower purchase price? I don't know. Is that better for you? In my world, if I can afford it, I'd rather have a higher interest rate, lower purchase price. Why? Because I can change the interest rate and refinance. I can't change the purchase price. Whatever you bought at, that's what you bought at.
Yeah.
So, is it better in 2025? I don't know. I'd rather buy with a high interest rate, low purchase price, and that just mats out for me.
That's some good strategery, man.
Yep.
Very good strategery.
Good strategery.
All right, guys, we need your help. We need your hearts, so go ahead and start hearting this
Yep.
up. And we need your shares.
Yep.
And we need you to load up this chat box with all your questions so we can help the world buy houses moving forward.
Says don't live in them. Okay, so Philip Patrick, if you don't live in them, it's a whole different scenario. And it is, I need rents, I need loan to value, and if you're lucky, you'll get 80% LTV. If not, sometimes you gotta go all the way down to 75 on many cases in that situation.
All right. Caroline, how to qualify for a second mortgage? I want a rental, but my current mortgage is $3,400. I'm going to assume per month.
Rent that out, Caroline, buy a new house.
That's the easiest way.
Yeah, rent it out. Just say, hey, you know what? I'm going to rent this bad boy, and I'm going to get me another primary residence. Primary residence, yeah. Can you do that in conventional? You sure can. Now, if that loan is FHA, you probably cannot get another FHA loan if it's within 100 miles, and there's not a real good reason. There's lots of guidelines on that. But you can get a conventional loan, and then your primary residence, you live in that bad boy, you got a new house, done deal, bang.
Yeah, I'm going to give you guys a little tip here, just a little tip. So, if Caroline, to see how much your house can rent for, and this is surprising, a very good source to see what your house can rent for is actually Zillow.
The Reese.
They're not good with home prices, but they will tell you how much you can rent your house for, and if you can cover that rent payment, you can get that next house for maybe 3.5% down, absolutely 5% down.
Appreciate all the hearts coming in. Thank you very much. Reese says Black Hat is cute. Take my number. Put the number out. You know what, Reese? He's going to take your number, put it on here. We're going to screenshot it. Cool. Makes sense. Thanks. Who's Chris and who's Lee? I'm Lee.
He's Lee.
That's Chris.
That's Chris.
Yep.
All right. So back to what we were talking about when we started, which was the one-time construction, guys. Building your own house sounds like a great idea.
It does.
It sounds like, hey, man, I can have the kitchen of my dreams, the garage of my dreams, the theater room that I always wanted, the pool room where I was going to put my bar and my whiskeys. It all sounds great, and it's a dream that all of us want to do, and I'm sure you do too. But it is not an easy process, guys. It's something that you're going to have to go through headaches with building, because dealing with the city, is it easy, Lee?
Oh, hell no.
Why
Dealing
not?
with the city. Well, first off, it costs a fortune to get an architect, okay? And then you have to get a good architect. Let me teach you that. Get a good architect. If you don't, they call them draftsmen, whatever. Don't try and save money on that. Because if you do, you're going to get some guy who doesn't know what the hell they're talking about. Mm-hmm. And that old adage that says, hey, if you think hiring a professional is expensive, try hiring an amateur. Okay. I've done it. I hired an amateur. I got my first set of plans, got kicked back. My second set of plans, kicked back. My third set of plans, kicked back.
What does that mean? Tell me what that means.
Fourth set of plans, they start charging you where I live. They start charging you $140 for new resubmission. I'm like, what are you talking about, $140? per renew submission.
Okay.
What is that shit? Yeah, they start charging you. Well, plans is when you sit it down and you go, hey, listen, I want to build this. And then they build out the house. And you're like, hey, I want a 3-bedroom, 2-bath, and I want it to do this. Okay, cool. Did you take into account the setbacks from the curb? Did you take into account subjacent lateral support, which is can the earth actually support that structure? And then did you take into consideration the height zoning, whether or not you need solar, what direction it faces? Will it be what's entrance and egress? Are you coming in from what side of the street, what side of the corner of the lot, or whatever? There's a lot that goes on there, and if you hire somebody who's just kind of guessing, it will cost you a lot. I made that big mistake, guys. I made the mistake. I will not do it twice, but I'm giving you some knowledge so you don't have to.
So give us some practical timelines. You submit your plans. You say they got kicked back. What's that time period before?
Good question. Very good question. So after you write a check for between, I don't know, $6 and $10 grand for that first guy to draft that up, it's going to take them 2 months. Okay, 2 months to do that. Okay, so you write a check to $6 to $10 grand, and you're like, okay, and you twiddle your thumbs for about 2 months.
Okay.
Then they finally give it to you, and you're like, all right, cool. And they're like, submit it to the city. Like, okay, hey, city, I would like to submit it. Like, oh, here you go. Thank you. Now you have to go to the printer. The printer's going to print it out for you. That's going to cost you $400, $500, $600 because it's big printing. It's not small printing. Big printing. So then you go, okay, cool, city, here you go. They're going to go, hey, thank you for printing that. We need 2 copies. You got to go back and pay for another copy. All right, cool. So now you show up with 2 copies. Like, cool, thank you very much. We'll talk to you when we talk to you. Like, when can I check back? Oh, I don't know. Our standard wait period is 8 weeks. So you're like, wait a minute, 8 weeks? Yeah, okay, cool. So it took you 8 weeks to get the designs, and then 8 weeks for the first set of red lines. And then they give you this, then they go, hey, great news, come pick up your stuff. Like, hey, here's all the problems. And you're like, okay. Then you got to go back to the guy who designed it, and the guy has to go, all right, let me fix that problem, fix that problem, fix that problem. And if he did a good job, then you get through the second time. But they've been told that most people don't get through the second time. I've been told the average person takes
get through
4.
I mean, they just stop? Everything just stops?
No, they get kicked back the second time. They kick back.
Got it.
So they get kicked back the second time. Then they get kicked back the third time. Get kicked back the 4th time. And then the city's figured out how to make money. We'll give you 3 free submissions, and then you start paying for every submission after that.
Okay.
Holy smokes. Yeah, that's real.
All right. Let's go move on to the questions. Ashley 1922. Hey, guys. I overdrafted my account once and got denied a loan.
Ashley. Ooh.
Got denied for an overdraft?
Overdraft? Just one overdraft? Just one?
Ashley, be honest.
How long ago was it? Well, did that overdraft turn into 4 late payments on credit cards?
Man.
If that overdraft changed into 4 late payments on credit cards, we don't care about the overdraft. We care about the 4 late payments on credit cards. The overdraft is your reason. The 4 late payments are the result. We only look at the result. And if it's erroneous or something's wrong, we can challenge it. We can actually challenge things on the credit bureaus. Because of the Fair Recording Act of 1987, we can challenge things on the bureaus, and if they're wrong, they have to remove it. So, talk to me.
1987, that's not even a real year.
It's not a real year?
T, 90K income, 15K down, 0 debt, and 780 credit. How much? That's a good file.
You take it.
That's a damn good file.
What do you think?
So the 780 credit, guys, I'll tell you right now, right out the gate, you're going to get approved, okay? 0 debt, amazing. That's why you have a 780 credit score. 90K income, my guess is going to be somewhere around the neighborhood of about 500,000.
Yeah, I'd say 450 to 520,
Okay.
somewhere in that range. Yeah, 450
Yeah.
to 520, depending on property tax base and interest rate. Those 2 things are very big on whether or not you qualify for that house.
Yeah, so you get pre-qualified still. With that credit, I'm sure there's no problems, no hiccups, but still get pre-qualified because you never know what could pop up. So don't get qualified once you identify the property. Get qualified, then go find the property.
Oh shit, CNB mad at us.
Okay, that's all right.
But okay, so we'll get to you, CNB. We want to talk to you. We're not going to ignore you. I just bought a house 6 months ago, and I want something a little bigger. What do you suggest I do? I think Washington. So, what I suggest you do, so there's a guideline. There's a guideline in FHA. So the guideline in FHA says, hey, I have to live in this house for 1 year. But there's some catches in that. If you have a reason, in other words, hey, my job moved me from Washington to California. That's a reason. You can get out of there. That's a reason that forces you to need a different house. That forces you to different. Now, there is a reason in the guideline that says, hey, my family grew. and I no longer fit in a 3-bedroom, 2-bath house. I need a 4-bedroom. Now, the underwriter is going to look at it and go, prove your family grew. Well, here's a birth certificate for my new son. Oh, it did grow. You can go forward and get another. You could, even if you're within the timelines, you can still qualify for another house. That really actually happens.
Yeah, very easy, guys. Just give us a call. Jay Fitz, do you guys have anything non-QM on your plate right now? What do you mean, in escrow, or do we have non-QMs available to finance people?
Are you trolling for business, JX Lifts?
Are you a non-QM
Yeah,
company?
I think he's a non-QM trying to. I get so many of those guys calling me like, hey, you got any loans for me? I'm like, I don't even know you. I don't even know you. You think I just give you a loan like that? I don't think you understand this business. You're going to be cold calling for about 6 weeks, and then you're going to stand up and go, hey, you know what? I'm going to go work at Starbucks.
Dang, man, why are you making
That's
it
a
so
little
hard on
harsh,
these
but
guys?
it's real. That's reality.
All right, CMB said,
Okay,
you guys
cool.
are all talk. I applied on your website and never even got an email or a cell from you guys 3 months ago.
No, CNB.
Cells are right here.
No.
Cells are
Cell
right
phone
there.
numbers are right here. Hey, CNB, here's how it happens. If you apply on our website, you make the application, that's one step of it. That's a very important step, but that's one step. The next and the most important step, upload all the documents. If you don't upload all the documents, it's just talk. It doesn't do anything for us. Now, if you truly uploaded last 2 years tax returns, most recent paycheck stub, bank statements, driver's license, social security card, all of those things, if you uploaded all of those things, we should have called you. We dropped the ball. But if you didn't, you're an incomplete application. We never got to it.
Yeah, that's it. And if you're really serious and you did do that,
Yeah,
our cell phone
call
numbers
us.
are right
Yeah,
here. Call us, text us. We answer to all
And
the
if we
different
didn't,
methods.
if we drop the ball, we'll apologize. We'll make it up to you. We'll put you at the top of the list and make sure you get a house.
Absolutely.
But if you're just here to hear mad, you big mad, there's a long line of big mads at us. They're like, you said I could qualify at 590. No, I didn't. I said the guideline allows 580 and above, but we have to put the rest of the factor in there.
Yeah.
But you said 590. No, I didn't.
All right. So user 2363 said thanks. Snack Mommy. Hi, guys.
What's up, Snack Mommy? I love the name. Snack. She got snacks.
Maybe she's a snack.
Maybe she's a snack.
Yeah.
Oh, I think we probably said that.
All right,
before.
Jay Fitz is big mad now.
Dude, somebody's mad at me. Who's mad? Who's
Not
mad?
the case. Was a broker for years, now in the non-QM space, but good luck.
Okay, I appreciate you, Jay. Yeah, I appreciate. I'm not Jay Lifts. I'm not mad at you. I'm just telling you the reality that I see. I get so many people call me up and like, "Hey, you got any loans for me?" I'm like, "I don't know you. I don't even know you." That would be like me going to a realtor and going, "I'm a loan officer. You got a loan?" I'm like, "That's not how it works. I have to build a relationship. Tell them, hey, listen." At some point, you may need, I know you probably have a loan officer, but at some point, you may need one that knows specialties in these areas. I'd like to be the guy you turn to. Then about 2 weeks later, they'll call me and go, you said you specialize in the VA loan, Lee, and this guy's saying that it can't be done because it's got a 621 FICO. I'm like, oh, well, why don't I take a look at that? Because the VA guideline says there is no actual FICO requirement. You're probably dealing with a bank that has overlays. All right, cool. I'll deal with them. No worries. Let me dig in. All right, cool. Now I've earned my way into their life. And then I show with superior customer service, I treat the veteran like gold, like you're the top of the top notch. Then I treat the realtor great, and they're like, hey, I think I'm going to use you for more loans. That's how the loan business works. Wow. A little rough, right?
Really? Yeah,
Jay Lift's going to be mad.
It's
Big
okay.
mad.
Okay, Snack Mommy said, score 645, 98K income, 15K down, 1,800 a month in bills. How much can I afford? Snack Mommy, 1,800 bills. Okay, I'm going to start with 1,800 bills.
Oh, that hurts.
No, because she could be adding in utilities, cell phone,
Okay.
things that may not
good
count
point.
for
Yeah.
debt to income ratio.
Good point.
But 645, that's an okay FICO. 98 income.
That's okay.
Use a
That's
baller,
pretty good.
Snack
Yeah,
Mommy.
That's $7,000 a month.
She
Maybe
saved
$8,000.
$15K. That's more than enough than a down payment for FHA.
Yep.
So, what do you say? Same neighborhood as the last one, somewhere between 450 and 520.
Yeah, somewhere in that range. Somewhere in that range. That $1,800 a month, we'd have to really factor that
Yes.
in because that $1,800 hurts.
Yes.
It hurts
Clear that
you
up.
a lot. Yeah, let's clear that up.
So, for your monthly bills that we use to factor into the loan, it's money you owe to a bank. So, it's car loans, private loans, credit cards, minimum payments, by the way. Clear that up, Snack Mommy. What's that number?
CMB says, I did upload everything. It says no further tasks. Let's look into that, CMB. What is it? Give me a first name or a last name because when we log into our system.
Text us.
Yeah, text us.
Don't be
You have
public.
to put it out
Just
here.
text
You have to
us.
just text us. Text Chris, your last name, and we'll go right into that. And we can. Everybody who's done it, when we look at the software, The software shows, hey, you got 7 loan applications since you started the live. All right, cool. How many of them? Most of them fill out the application like 60% of it, and then they're like, all right, whatever. Then we go to how many of the documents are uploaded. If there's like 3 documents, it's not a file. We're not there. If it's all 11 documents, that goes to the top of our file, and we should have called you. If we didn't, like I said, we will issue an apology. We'll put you at the top of the list. We'll make sure you get a house.
Yeah. Okay. Plus, with a sad face, do you approve loans in Texas?
All day, every day in Texas. I'm actually closing one right now in Texas. In Texas.
Selena
in
was
Buda,
from Texas.
In Buda, Texas.
Selena was from Texas.
Yes. Yeah. Buda, Texas.
Cheer.
Buda.
Snack Mommy, what is the max? FHA DTI.
Max. Snack Mommy. Oh, wow. You're asking the tough questions.
I like this, Mommy.
Yeah. So, if you know how to work the system, you can go 56.99999999999. If you know how to work the system.
Yes.
That's it. Yeah, pretty simple.
Right.
Hey,
Karen Patterson. Hello.
What's up, Karen Patterson?
Snack Mommy also said, I am a snack.
Oh, I am a snack. Here you go. I love that confidence. I love that confidence. Yeah.
Okay, what about FHA in Texas?
FHA all day, every day. That's the one I'm closing an FHA right now in Texas.
Right now.
Texas is a very unique state because there are special rules there, and the tax base, depending on where you're at, you can ratchet up pretty high.
Yep.
You can get pretty high sometimes.
Diego, what is an average down payment for a 1.3 home, 5.999 interest, 1.9 taxes, and a 754 credit
Diego,
score?
Sounds like you already have a house. Sounds like you have a...
Or he's looking at his LE.
I know, he's looking at his LE going, those are big numbers. Well, not if you're buying a $1.3 million house. You're not worried about that.
Well, there's no average payment. All the data is right there.
Yeah,
it's whatever the math says.
Yeah, that's math's out. So 5.99 is 5.99. That's what it is. That's what it is. It sounds like you already have the house because getting a 5.99 today,
right now,
very difficult.
Very
difficult.
But congrats on a 1.3 home.
Yeah, 1.3 home. You know, Diego. You know.
Jan K, how can I prove income? I have income and everything else.
Prove income. That's pretty simple. What'd you tell the IRS? What'd you tell the IRS? Whatever you told the IRS. Because here's the secret of this, okay? If you go to FHA, which is direct government, VA, which is direct government, or USDA, those are the 3 government loans. That's direct government. Those are government loans. If you go to Fannie Mae or Freddie Mac, those are GSE, government sponsored enterprise. So government. So the government's going to go, hey, how much did you make? Well, let's talk to the IRS, which is government. Whatever you told the IRS, that's what you tell these guys. You can't go, hey, trust me, bro. I know what I told them, but that's bullshit. This is what I really mean. This is the same guy.
Where's
the
IRS?
government?
What's IRS?
Internal Revenue Service. Oh, my God.
What does the fox say? That's old, man. Plus, sad face. Do you lend in Texas? We already said yes.
Yes, we lend in Texas. Actually, my primary residence is in Texas.
And so is his truck.
So is my truck. I have a big-ass truck in Texas.
Snack Mommy. Car loan, $1,000. Student loan, $500. Credit cards, $300. That's a lot of debt, Snack Mommy.
So, Snack Mommy, let's hope that you have 10 payments or less left on that car loan, because that's a saving grace right there. The installment guideline says if I have 10 or less installment payments left, I can ignore it. Because that 1,000 hurts you the most. Student loans, 500. That's not very bad. We can factor that probably a different way. Credit cards, 300. Yeah, pretty good actually.
Yeah. What do you do for a living, Snack Mommy? Let us know. And what kind of car are you driving? That's a nice car. I know
That's
it
a
is.
nice car.
I
Yeah,
know it is.
I'll tell you what.
All right. What's the turnaround time to get a response?
Depends on how motivated you are. If you're motivated, call us. That's real motivation. If you send in the thing and you go, well, let me see if I can qualify. That's not very motivated. If you call me and go, hey, Lee, I got a house I'd like to offer on tonight. I'm like, tonight? I've never even met you. They're like, yeah, I know, but I've seen you on TikTok. This happens a lot, by the way.
It does.
I've seen you on TikTok, and I'd like to offer tonight. And I say, all right, cool. If you are serious about offering tonight, I'm going to take an application from you right now, and I'm going to send you a needed items list. I need it back within the next hour. Can you do that? Yes, Lee, I can do that. All right, cool. Let me take the application. Let me pull your credit. Oh, I just pulled your credit. 780 FICO.
That's
Great
a good
news.
FICO.
Great news. You're an engineer making $200,000 a
good
year.
job.
I'm just going to take what you say and I'm going to start building that file. But it's not going to be good till you get me the documents. All right, cool. 1 hour later, you're going, hey, Lee, I'm trying to upload all the documents. I should have them to you in the next 30 minutes. All right, cool. I built your file. You are qualified for $500,000. I need to prove income. I need to prove assets. I need to prove everything you told me. But based off that primary conversation, you're qualified. I'll get this pre-qual out to you the minute I get all the documents in. I can prove everything that's going in the file. And you're like, cool, that's awesome. How long does this take? 2 hours.
2 hour turn time. Is that fast enough for you?
If you're motivated. If you're like, hey, I'd like to kick the tires on a house somewhere in Georgia or California or maybe Florida. That's not very motivated.
And I want to do a soft pull.
Oh, I want to do a soft pull. Yeah, I want to do a soft. I don't want you to pull my credit. The minute somebody tells me I don't want you pulling my credit, I'm like, cool, thank you very much. There's probably better loan officers out there. I'm not your guy. Go.
All right. AJ Buffy, how about Pennsylvania?
Pennsylvania. We love Pennsylvania. We want Pennsylvania to go red.
T-money.
Red.
T-money.
Yeah, Pennsylvania. But we will do loans in Pennsylvania all day, every day, every day. I hope I didn't just lose a client there.
You didn't.
Yeah. We want to go red.
Tons
in
of
case you
smart
haven't figured
people.
this out, I'm not wearing a red shirt, but this is basically the same thing.
Tons of smart people in Pennsylvania.
Do you sound California? His primary residence is California, and we are currently in California.
Boom!
Riverside, California.
We can help you.
Yeah, we know California well. We do most of our loans in California.
Jam K, reach out to us.
Yep.
All right. How long does it take to get pre-board?
I think I asked him. Yeah.
Creative Chaos. Do you work with teachers and the Teacher Next Door program in South Carolina?
You take that.
Man, Creative Chaos, I'll tell you right now, we love teachers too. We love teachers.
Teachers are my favorite.
Teachers in our families. We love teachers. Teachers are teaching our youth. So that's our next generations that are going to be taking over this country. So
dude, haters going to hate. Haters going to hate. Shakers going to shake. Likers going to like. Teachers going to teach.
And lovers going to love. So here it is. Yes, we all teachers. Yep. All day long, yes. Teachers Next Door program. Let me talk a little bit about that. That's marketing, okay? There's marketing that's put into that.
No.
There's many programs just like the Teachers Next Door program. So I don't want to burst your bubble, Creative Chaos, but I do want to let you know that if that program works for you and it makes sense, we'll definitely move forward with it. But we're going to see other programs that you also qualify for so you can choose what's best for you and your family. So I recommend you reach out to us.
Haters going to hate. Teacher's gonna teach. Hey, if you need a badass loan,
you should write that song. You should write that song, man.
I'm gonna write that song. I'm gonna get sued too.
Professor Trev, 75 income, 75K income.
Professor.
780 score, 350
smart,
bills.
huh? You
Looking
fancy,
to make
Professor.
a USDA loan. House in Dad's name.
Professor. Wait, your house is in your dad's. Professor, you still live with your dad? What the hell's going on
That's
here?
That's a flip, though, because everyone needs to put everything in their mama name.
Put their mama name? Yeah, Professor lives with his dad. Dude, Professor Trev, man, you come in with some pretty good clout right there. 750, 75, 780 FICO, great FICO score. 780 FICO score.
It's a house of learning men.
Great. It's a house of learning men. I love it. 75K income, that's great. Looking for maybe USDA loan, house and dad's name. So I don't know what house and dad's name mean, but I do know what USDA means. That means that the house has to be geographically qualified. You can't just pick a USDA loan.
What does USDA stand for?
US is United Services Dairy Association. I don't know. You tell me.
United States Department of Agriculture.
Department of Agriculture. So the house has to be qualified by USDA. How do you find that out? Go to USDA.gov, put in the address. It's a little more complicated than that. Put in the address. It gives you a green thumbs up or a red thumbs down. That's what it does. Green thumbs up, red thumbs down.
Yeah, so depending where you're at and where you're buying, Professor Trev, your income may kick you out. It might be a little high. USDA has a high and a low that you have to fit in, and you may be out. If you're in an area where it's like really expensive, but it's USDA, so I don't know if it's going to be that. So just be aware of that. We'll help you, though. We'll walk you through the path.
Yeah. Should I leave it or change my name before we sell? I was just joking, man. Professor Trev's a great name. It's a really great name. I don't think you should be changing that.
Do I have to call you Professor?
Do I have to call you Professor? It's going to depend on the loan process. I understand you're saying that the dad, should we change it to somebody else? There's more. It's very complicated. There's something called continuity of obligation. It's actually a guideline to prevent straw buyers or straw owners. There's continuity of obligation, which means you have to own the house for 6 months before you can make any moves on it. There's actually a process for this. Give us a call. We'll help you out.
Absolutely. Diego, no, I don't own it yet. The bank was $90K down. I feel too much.
For a $1.3 million house? $90K? So let me give you a little simple math here. Simple math. Wow.
That's not bad, kiddo.
Yeah, 1.3
Okay, what
million.
city and state is this? Give us a city and state.
1.3 million.
If he wants to put a smaller down payment, we can make that happen depending on the city and state that it's
Oh,
in.
you know what happened? He jumped into a high balance. The
That's why I'm asking.
Yeah, the
That's why
high
I'm
balance
asking.
changed. So there's guidelines. The guidelines say if it's FHA 3.5% down, I'm going to say you didn't go 3.5% down. I'm going to say you went Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac have regular conventional conforming loans, and then this next category called high balance. High balance has different guidelines and different interest rates. And then there's something called jumbo above high balance, and that goes to however big you want to go. But if they're asking for more than your straight 5%, you probably went into high balance. We'd have to check your county and your overall deal. Send us your LE. We'll take a look at the LE and we'll tell you what can be done.
Yeah. Jess, no doc loans. No doc loans. No doc loans.
Yeah, no doc loans. You must vote for. Yeah, no doc loans. So no documents at all. Bro, can I just get a loan? Oh, no, bro. Bro, I want to buy a $500,000 house. I don't want to give you any docs. Bro, can you do that? Can you?
Sure.
No, bro, no docs. No docs. Can you just $500,000 house, man? Whatever. Dude, who cares? You're a bank. You have a lot of money. Trust me, bro. I'll pay for it. Trust me. There's no such thing as no doc loans. Yeah, it doesn't exist.
No doc loans.
Doesn't exist.
Yeah, it's tough. But tell us your scenario. Maybe we can make you fit into something.
Jess, nice try. Cute. No.
Be nice, man.
Cool.
Be nice. All right, Professor Trev. We gotta kind of run.
Dude,
through
yeah,
this,
we gotta start moving.
Right.
We gotta answer some questions.
That's good to know about payments left.
Yeah.
That's good to know about payments left.
That's good to know. Yeah, Professor Trev, any installment loan with 10 payments or less can be ignored, but your loan officer has to know the guideline and go in and hardcore ignore it, because if they don't, you won't get it.
Look at Snack Mommy, man. 2024 Lexus RX 350. Nice ride.
Damn.
She's a tax accountant in Texas. That's why she's a baller.
Yeah.
I guess I could refi the car and get a lower payment. Would it help if I lower the payment to $800? It'll help.
Yeah, it kind of helps
But
a lot.
do this, Snack Mommy. Do this
Yeah.
first. Let's pre-qualify you.
Yeah.
Let's see where you stand. Then we can make proper adjustments.
Yep.
Okay? So call us.
AJ Buffy. What's up, AJ Buffy?
Team Money 2024.
Team Money 2024. We dig you, AJ Buffy. Appreciate you, man.
Joel wants to know if you work in Nevada.
I work in Nevada as often as I can. Las Vegas, specifically, they
Love
merged
that
as
city.
I came out. Love Vegas, man. But what happens in Vegas? That doesn't stay in Vegas, man. People,
makes you tired.
They rat you out all the
Whatever
damn time.
happens makes you
Dude,
tired.
I've been wandering the streets with this guy drunk at 3 a.m, and he offered me some more beer, and it was a strange situation. Yeah.
Jam 4411. Perfect. I will definitely reach out. Thank you.
Appreciate you.
Creative Chaos. I'm on it. Let me gather the docs so I'm ready. I'm already on the site.
Perfect. We are here for you, Creative Chaos.
Luke's Gates. When an MLO wants states to go red so the economy gets worse and rates are forced to go down. Greed.
Oh, Lucas Gate. Oh, I love this. We got a hater, man. We love it. Hey, I got news for you, Lucas Gate. I have my reasons why I want the states to go red. Where we're at right now, California is not going red. It is not. It is absolutely not. It's going blue. I'm not happy about it, but it's going blue. That's just reality. That's what it is. And I have to face reality. My other house is in Texas. That is going red. That's reality. Here's the other reality. I don't give a shit when it comes to my business. I just want to fund more loans. Yeah, what that means is lower interest rates so that we get more people into houses so that my income keeps going up. That's what it's for.
Yeah. Professor Trev bought it from family. It's in Rikers, Texas, and it qualifies. Already checked. It's under limits. Professor Trev's all over it.
Professor Trev, you got to give us a call. We got to work on it.
Ashley Heiklin. Hi, strangers.
Oh, Ashley Heiklin. What's up, Ashley? Great to see you.
Where you been?
Where you been?
We
both asked you 3 times already.
Diego said he's in Oxnard, California.
Oxnard.
Is that okay? So is that what's the limit there? Is that a big limit? Is that $1 million? That's $1 million.
Oxnard?
What was the purchase price again, Diego? What was it?
Yeah, 1.3. It was 1.3.
Oh, that's gonna be too far.
Yeah, that might be because I think it's 1.2. I think it caps at 1.2.
Yeah.
Oh, now I got it.
Yeah.
Oh, you know what happened? Here's what happened. You have if that's the county, and don't quote me on this. We'll have to dig in and find out for you. But there's a $1.2 million cap, so you can go 5%, wipe it to the 1.2 million, which would be roughly 60 grand. But above that, you got to cover the rest. So that probably is what happened, or a percentage of the rest.
Call us, man. Yeah. Let's talk about it. It's a brand new community with Lennar leading its new community.
Oh, Lennar? Oh,
okay.
Lennar. Oh, you're getting... Dude, Lennar is amazing at building houses. They make some wonderful houses.
Those next gens are pretty badass.
They also screw their clients over in so many ways.
Royally.
You have no idea.
Royally.
No idea.
So much money.
If you want to know how they screw them over, Diego,
call him.
ask us. I'll actually say it right. We got the time.
Call him. I don't have that time.
Yeah, we do. What time is it?
If you have an
We got a little
extra
bit of time.
35 minutes doing nothing,
Yeah.
call this guy. He
Yeah.
will tell you about Lennar.
Yeah, Lennar, they screw their clients over, and you don't even know they're screwing you over in so many different ways. It's so many different ways.
Money you don't even know you're gonna spend that
You
need
don't
to
have
spend.
no idea.
No clue.
No, and they sell it as a benefit. Like,
Benefit.
hey, this is a good benefit for you.
Oh, blank
Trust
slate.
me, bro. Yeah,
Blank
trust me.
slate.
Trust me, bro. This is good for you.
All right, Mr. or Mrs. Patel, good time to refinance or what?
No,
Or what?
probably not.
Or what?
Yeah.
Or what?
If you have a 8.5% rate because you got screwed on about a year ago, you might be okay to refinance right now. But overall, probably not a good idea to refinance, with a few exceptions. If you're doing cash out to cover 30% credit card debt, maybe a good time. Maybe a good time. 7.25, probably not. Probably not. Even if you have an 800 FICO, I'd probably price you right now 7, and you have to have LTV of 80% plus. So most loan officers are going to go, you know what, we got to look at, I'm just going to tell you right now, probably not a good idea for most people to refinance right now unless you're in the 8.25, 8.5%, somewhere in that range, then it's a good idea.
All right, guys, so pull out your phone, screenshot this, save these numbers, call us if you're interested in getting a home loan, or you can go to the link in the bio, select apply for a home loan now, or if you have crappy credit, just click on the button that says fix my credit. All these options for you guys. You guys are going to be homeowners in no time. I believe it.
I believe in you.
believe it. All
I
right, dude,
believe
sign
in you.
us
You know
out.
what? Hey, you know what? We appreciate all of you guys. We have been Chris and Lee. We are out.